What's up, traders? Happy Friday. I am actually really excited to talk this week. Got a lot of good ideas for you guys. One that came from members on my Discord, which I love the contrarian play, and I'm going to get into. I'm not going to bury the league. We'll talk to it very early on. Got a lot of other things to talk about. Cryptocurrency, of course. Tesla. I've got to make a decision on what I want to do with my Tesla, as well as tech in general, and catching up on the plays I've started to make since January. So we're going to talk about all that and have some fun with it. So hang out, pass the music. I'll be right back. What's up, traders and friends and traders? Thanks for coming to hang out. We got a lot to talk about today. Stocks, crypto. I made a post early this week. I want to go into a little bit of detail here. I think I'm also on Twitter. I got that working today. By the way, if you have symbols to look at, make sure that you post them in the chat. Do the like thing as well, please. I'd appreciate it because it helps, I guess, the algorithms. I don't know. But the reason I really love folks on my Discord is because they were the ones that had brought to me brought to my attention the stocks that were the idea that I put together this week. It's not my idea. It's them using the the tactics that I talk about for finding support and resistance in stocks and putting it together, and they just happen to be in the same subsector of the stock market. So we put that together and came up with that idea, and I really like it. It's a contrarian play. I want you to think about it a little bit. I'm not going to tease you too much and make you wait too long. I'm going to talk about crypto first, but think about this. What is the most hated subsector right now? Just think about it. I mean, we know what the loved one is: tech, AI, quantum. I mean, these are things that everybody's talking about and trying to buy. I'm not particularly interested in that because I'm a contrarian. But think about the the sector of companies that have been really hurting because of what's going on socially, culturally, politically. Okay. And I think you're going to be pretty surprised when you kind of think about it and realize what it is. And I keep going back to 2021, along with every other instance of where people think that these companies are going out of business, and they're good companies that have been around for decades. And yeah, there's a reason why people think that they are down, but that's what makes these stocks cheap, is people thinking, oh, this is not what you should be buying right now. It's just going to go lower. That ends up being where the value is where it's depressed because of narratives that people have said about what is going to happen in the future. Just like things are really bullish and high because everybody thinks that's the best thing since sliced bread. But don't worry, we'll get to it in a second. But first of all, I made this post earlier this week about what's the most bullish crypto. And of course now, today as I go into this, you know what I love, Monero, because I believe it's the only real cryptocurrency. It's privacy focused. Everything else, is surveillance coins basically, or meme coins, or both. And I just look, it's not gonna. I don't expect it to be Moonero, as they called it on Reddit, but I just think it's a very good, solid, appreciating instrument, asset that should be in people's portfolio to have a sort of obfuscation of wealth. Won't talk more about that side of it, but I mean, it's private. This is what cryptocurrency to me, it's what it meant to me over a decade ago when I first got into Bitcoin, and that's what's carrying the real torch, and it's what's actually used. It's been used as a currency, and its function is more or less a stable coin for years now. Has been doing a little bit of a pump, and today, right as I was getting ready to do the show prep, it had a dip. And yeah, very, very, very nice dip in here. And so I'm just going to sit here and I'm going to stack some whatever you call them. So yeah, we'll see. We'll see what happens here. But just to kind of go a quick recap of this post that I made on TradingView, if you guys have watched my programs for a long time, for years even, that I've been making these, I've always relied on the daily Ichimoku cloud as a trend. It's a trend indicator, and actually as a trading strategy, especially for Bitcoin. I've done about once a year, I do a recap of using the simple strategy of the Ichimoku cloud with Bitcoin, the daily Ichimoku cloud. It basically is this. I'll do a quick recap where price versus cloud, bullish, bearish, very simple. Price above the cloud, bullish, with the momentum, which is also in the Japanese sense, I'm mispronouncing it, Chikao, or the lagging span. When those two are in the same alignment on the period of the cloud, you have a bullish trend. This bullish trend started in September of 2024, and that is what has taken us up to here, and its momentum has sort of faded a little bit. We're not bearish yet on Bitcoin, but I've done the back testing going back all the way to the early days of 2010, 2011, when there's good price action. And following this method, yeah, you get out, and sometimes you have to get back in, but it has outperformed hodling. If you just bought like one Bitcoin 14 years ago, 14 now, back in 2011, and if you had flipped it using the Ichimoku Daily Cloud, you'd have about 7 now. And I'm going to update that when the time is right. We're not there yet. Still need to get momentum on this side of the cloud for it to be bearish. Price is already there. Had a nice little pump today, but it just came up here to hold this middle of the, can't break above the middle of this this consolidation right here. You got a false breakout coming out here, but topic today is not about Bitcoin. But the other ones I looked at were the majors. I mean, you got Solana, which I think actually, That's the only one I've actually had to start looking at because a lot of these meme coins, which has kind of become the use case, one of the best use case for cryptos, frankly, is meme coins. It runs on Solana because meme coins are basically just smart contracts, and Solana does them cheaper and better than Ethereum, which kind of started the smart contract. But on that note, Ethereum has been the big loser. Ethereum is full on straight bearish. Bearish. Just price is out, momentum's out, it's losing. And when I made that post, the best performing was Monero, which is still, if you kind of look at it in comparison, price is still above the cloud, momentum is a little bit above the cloud, came back here to this point. But if you look at this right here, middle of the cloud, getting on the downside. Solana, again, coming through the cloud. Solana's starting to get a little bit bearish. Ethereum, definitely full on bearish. Monero is the only thing in the recent term that has been kind of holding its bullish strength. Look, as I said, I don't expect to buy a Lambo on this thing, but it has a use case. People use it to transact online for whatever they want to. People just see Bitcoin as a store of value, and that's fine. There's a lot of stuff going on with MicroStrategy that I'm going to talk about here in a little bit. We'll talk about that next, but just don't sleep on it, guys. Don't sleep on it. Don't sleep on it. All right. Well, let's go ahead and talk about that too. We'll do cryptocurrency and then we'll look at stocks here in a second. As always, if you have questions, I'm here to teach. I'm here to take feedback. I'm here to take information. Like I said, the stocks we're going to talk about today. I wish I had a prop here to talk about it, but it's candy. It's candy. Really. I'm going on candy. We'll talk about it here in just a second. But I'll go through a couple of tweets this week because MicroStrategy, which I am short, by the way, with puts. I don't have a short Bitcoin position on, but I think the asymmetric short entry that I want to be in is MicroStrategy short. I think that's going to give the best bang for the buck. So this MicroStrategy had earnings this week. No surprise. Their core strategy, which was business intelligence, is losing money, has been losing money for many quarters, but we don't really care about that. In fact, I did not expect any actual price action based upon earnings because no one cares if MicroStrategy is actually making profit now. The only thing that it matters is, does Bitcoin go up? That's the only thing that matters. And so what they've done is they've released another stock ticker called Strategy, which is a convertible preferred stock. It's a whole other stock. I don't think it's not a company. It's just a convertible stock converts into MicroStrategy common stock, but it pays a dividend yield, at least from the initial offering of I think 8%. Okay, and so I was reading through some of the comments right here, and they asked the question, what exactly, like, where is this dividend coming from if MicroStrategy is not making any money, if it's not getting any cash? I don't think that he's got any more money coming from bonds yet. I mean, I don't know where the cash is coming from now. It's from this stuff. But the question he asks is, where does the money come from? Where's the cash come from? It needs to be paid from ATM. So, I asked Grok right here, what does ATM mean in the context of dividends? And so I asked this a little bit earlier. ATM refers to at the market. And so, traditionally it's paid from profits, but it's where actually to pay this dividend, I guess it's quarterly, they're going to sell shares of STKR or maybe MicroStrategy, I'm not sure. So they're going to sell shares to raise cash to then pay investors in this thing. So basically they're taking existing money and they're selling it to generate cash to pay people that already own the stock more stock. It's beautiful because it's literally a Ponzi, but totally legal, totally within, I guess, the realm of what you can do. Basically, MicroStrategy, being the Ponzi that it is, has created a Ponzi inside a Ponzi. It's beautiful. It's deliciously beautiful. The guile and the audacity of this. And you know what? Maybe it'll work. If Bitcoin moon, everything's going to be fine. everything's going to be fine as long as Bitcoin goes up. But as I've had some discussions with people this week, everyone pretty much agrees that this bullish cycle, which has you guys got to remember, time passes. Okay, this bullish cycle that we're in, this everyone knows about the cycles. It began in November of 2022. It's been going on for over 2 years. It's going on for 27 months. Okay, a lot of people say that they go on for 30 months. 32 months. I think the average was about 30 months if you look back at the other cycles. And so as we get further into this year, we're 2 months in, everybody knows this is going to be the top of the cycle. And so a lot of people have different opinions about where this top is going to be, when it's going to be. A lot of people I hear say October. A lot of people say it's going to be 180. I personally thought it would top out about 140. But either way, everyone, no matter how bullish you are, agrees it's going to end this year. So how much more are you wanting? How much more do you think you're going to get out of it? And what's the downside risk, more importantly? Well, the downside risk we know is about 80%, and from the all-time high. And so if you're looking at 180 from 100, or wherever it is, 96, let's just say 100 because that's where we're at. So you're looking at 80% upside to a 70% downside. 80%, that'd be back 21. I don't think I'm that pessimistic. But we'll see. At a minimum, 50% takes us back to below the ETF. We'll see. Great store of value. Can't make more of it. Limited supply. Yada, yada. We'll see. All right. So, I need to actually make a post about this. One more thing about Bitcoin kind of throw out there. And I normally stay away from putting politics into my investment thesis, but I don't think people can help it nowadays. And so one of the things that I read this week was this guy by a guy named Jeff Park. He, of course, works for some sort of a Bitcoin consulting, so he's basically going to put out bullish stuff. But as I'm reading, his thesis here, where is the... Okay, so right here. This brings me to my second point. I've shared before that Trump's number one goal is to lower the 10-year rate. The reason being that his own bags depend on real estate. Now, what's wrong with this here? What is wrong with basing your entire thesis on the fact that Trump is doing X for reason Y? Well, first of all, you don't know that he is doing that. And second of all, you're drawing this from your personal beef that you think that Trump is just president to serve his own interests. A lot of people think that way. A lot of people think that rich people like Elon Musk and Trump are just inserting themselves in government to make themselves richer. That's all they want. It's just more money, more money. The problem with that is I think that a lot of people are projecting. A lot of people, either they don't have enough money or they do have a lot of money, they're rich, and one of the reasons they got there was because they never felt like they had enough. And so they just kind of project that people just do things to make more money. Maybe they are, but I don't try to get into people's minds and hearts and try to impugn what I think is their reasons and their feelings, because I can't know that. So I think basing a thesis on nefarious intent of people for investment, I don't think that's a very good one to go on. And to that end, let me talk quickly about Tesla, because I've got to make a decision myself about Tesla. I got a lot of friends that are divesting from Tesla, and I can see why, both in terms of personal bias against Elon, what all he is doing for the various things that he has done in recent times, or really this Elon hate. I noted it started happening on the Tesla charts somewhere around 2022, 2 years ago. I started noticing all these articles coming out about Tesla and how it was unsafe and blah, blah, blah. It was also the fall off from the whole EV hype that really kind of depressed it. But I really saw coordinated articles coming out trying to push Tesla down, get everyone to believe that Tesla was going to fail. And that got it down to 100. And that gave us some nice pickups around 150 and 200 over the next year to pick it up and ride this recent, rip that it has had. But now, we got to make a decision here. Are we? It is not it is not wrong to say that because people are going to believe something about it or dislike Elon, as this is why CEOs shouldn't go into politics. There could be a real effect on people buying Teslas because they don't want to have anything to do with Elon. I need to account for that. That is true. There's also let's see. There was one other thing that I was looking at for. I posted. Hold on. I posted this on Discord earlier today. Something to keep in mind. Oh, so of course Tesla's PE ratio is and always has been incredibly high. That's because I've always been assured for many years it's not a car company, it's an AI company. And I believe it because I press a button on mine and it takes me to my destination. And if you just sit in a Tesla and watch it full self-driving, very impressive. And so, yeah, but it is one of these things is not like the other in terms of their growth and earnings as far as how are they actually approaching a reasonable justification for this PE ratio, which looks to be about right here, about 180 or something or above. Meanwhile, their earnings growth is actually negative. So need to keep these things in mind. And of course, I've been selling covered calls against this, and I actually closed mine out. Because I took one before earnings on the 30th, and I closed it out actually yesterday, Thursday. So I think I'm gonna try to hold on, and I'm gonna manage this by selling covered calls, and that's how I'm gonna manage any potential downturn. Where I think that it's going at this point is probably down to 350, or in a longer term, recapping the entire move up to 313. So we're going to see what happens there. We're going to enjoy the downturn and see and evaluate and not let our politics get too much into it. Okay. Again, if you guys have questions, if you guys have complaints, if you guys want to tell me I'm wrong, please do. And also, but more importantly, put symbols in the chat because now we come to the gist of this here live stream. So I talked about this last week where I talked about the plays I'd made in January. And those have done pretty well so far. Had a couple earnings and stuff. LRCX, MMC, NUE. Oh, MMC, nice little pop-up this week. You always wish you owned more. I mean, this was something I picked up mid-January. NUE is actually a materials play that I really like. I think I might add more to it. I want to come back a little bit. But this last week was this was posted by many people on my Discord, Hershey's, and they were looking at what I have tried to teach, which is the volume profile as a support or resistance tool. And one of the things that Hershey's came down and did was they hit the volume profile from all the way back in 2020. Big old move up, and coming from an all-time high discount down about almost 50%, 46% from the high. Now, let me look up something. They had earnings. They had earnings this week, and it dipped a little bit below. I got it down here about at the volume profile, about 148, maybe a little bit higher because I was playing the 30-minute spikes, which is what triggered me to look at it. And yeah, I made sure that I left enough of a buffer in my position size that this didn't worry me that much. And then earnings popped it up. Why did earnings pop it up? Well, let's quickly look at what is one thing that Hershey's, being a chocolate company, has to buy a lot of, and that is cocoa. And I don't know if you guys have looked at cocoa, but cocoa is trading for the last several months, going back to basically the beginning of 2023, like a meme coin. And it's been pretty high. But what's interesting and what I really appreciate as a trader is looking and seeing what was in the earnings for Hershey's. Let's see, HSY earnings, derivatives. So one of the things that they did was to keep their, I'm trying to find the number. Hold on. Looking over here on Twitter. Let's see. The number I saw was $460 million they made in derivatives. In other words, futures options on cocoa. And so, in other words, while cocoa's been going up, what does a company that uses a lot of that product do? They, believe it or not, futures are not for us traders. They're actually for businesses to hedge risk with commodities that they use. And so they've been very smart about that. And I can't find it rough. The number I saw was $460 million they pulled off of just futures contracts. And that's what has made them a little bit of money this past year. But more importantly, we now have a false breakout short, big one on earnings for this level. I was already in before it, took the risk, but it is looking very good. Now, why is this also down? Well, there's cocoa, but the other one this week is Mondelez, which came to yet another 50% drawdown from the trend starting all the way back in 2018, and it also came to a volume profile level at about 55. And so that was where, and again, earnings, boop, I love earnings spikes, especially that. Just imagine as a launch, a bunch of people got flushed out that were long, and now they're going to be either the shorts are going to be forced to close, or people are going to be FOMOing back in. That's the psychology that I think about when I look at these price spikes that I scan for. But it's also at this level. Now let's put it all together. What is one of the narratives that's been going on to keep Hershey's and Mondelez, which by the way is a candy company, down? Well, you've of course got they talk about the Golden Globes, which are the awards shows for Hollywood and blah 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 blah. Well, they talk about, oh, this is a great night for Ozempic. It's a weight loss drug. It cuts cravings. It's been a whole narrative over the last several weeks, excuse me, not week, but 2 years almost, about how people are going to crave sweets and other things less because of Ozempic. Maybe. I mean, I think eventually, like any drug, its effect is going to wear off, or people are going to get a tolerance. That's how drugs work. It's great for the pharmaceutical companies that sell this stuff over the counter. But that's been playing into it as well. And when I actually brought this up to a friend of mine who's a little bit more political savvy than I, he said to me, but what about Robert F. Kennedy? It's going to take over Health and Human Services. I was like, well, what does that have to do with it? Well, isn't he going to ban, junk food companies and stuff like that? I don't think so. But that sounds like a bearish narrative to me. And so at the beginning of every year, I go and I look at the market and I say, okay, what do people love? Well, people love tech. And wow, tech, this is the XLK, the technology fund. That's way on up there. Just like the stock market, it's kind of slowed off a little bit. But man, it's been making some great gains over the last year. And why not? Everybody's talking about quantum. Everybody's talking about, AI. Yeah, best thing ever. I already have tech. Okay, got it. I don't need more. May want to actually rebalance a little bit. That's what I'm going to consider next week. We haven't really done anything particularly scary in tech. I mean, we kind of failed to break out in January on tech. It's going to look a lot like. I'm still very, very, very sus about the stock market right now. I would like to see, this is the S&P, and then of course this is NASDAQ futures. I would like to see a good solid breakout that we're just not getting for me to really want to go long this year. I've been waiting. I've been playing the individual stocks. That's what I've been doing to kind of, make sure that I have long exposure for the market. But as far as like just throwing it in and allocating a bunch of money to VOO, I have not done that yet. Normally I do that, in my tax advantaged account. So just, VOO and chill. I trade and then I VOO and chill. I don't want to get in my own way for retirement, even though it's years down the line. But that's what I've been kind of looking for, is I've been looking for some kind of a really nice bullish sign and just not getting it yet. And I'll be patient. I'm not particularly worried about it. I think I can jump into it. They say time in the market is better than timing the market. Well, I'm going to do better. So that's what I'm looking for, a good solid close, a good solid weekly close above the past all-time high, and then we're going to start talking bullish on the market. But tech is not what I'm going to be buying this year. And so, this takes me back to 2021 when, do you remember when EV was all the rage? Every year has its thing, okay? I actually don't even know what the quantum stocks are. I don't know what the AI stocks are, except for NVIDIA is considered to be that. By the way, NVIDIA, if you remember from last week, I have NVIDIA shares, a lot of it, from way back around 2020 time, back to pandemic time is when I started grabbing it, a lot of it. And I do have a put position on here, long term and short term. We're going to see how it plays out. They got earnings coming up the 26th. I don't know if I talked about it last week. I think I probably did. But all this China AI talk, I think that the speculation is that 22. Well, it's not speculation. 22% of their sales last year went through Singapore. Almost a quarter of NVIDIA's sales went through Singapore. Little bitty island. Is it an island? I think so. Little city state that is independent, former British colony, British outpost. And it's over on that sphere of the world where China is present. Who do you think is buying all those NVIDIA chips in Singapore? Are they packing into data centers in that little city? I think we know. And that might be something that is a little problematic because we banned China from buying the AI specialized chips, and pretty sure they got around that by buying through Singapore. I don't know if that's going to have an effect. Market's obviously not pricing it in. It's come back up to test the bottom of this range again. We're going to see what happens, but I'm going to keep my my puts through earnings and manage them, manage the delta and the theta, because I actually have a put going out to I have an 80 put going out all the way to next January, and so I'm going to sell against it as things go along. I just, people keep asking me, I don't want to buy tech this year. I just don't. Maybe it's me being contrarian to a fault. But anyway, Mondelez, Hershey's, Candy, those are my contrarian plays. NUE is a materials play. This is, if you really think that we're going to be onshoring a bunch of stuff to the United States, then we're going to need some steel and materials to build that stuff. And MMC doing real well from there, and LRCX keeps holding that 73. We're good. But this takes me back to, like I was saying, just kind of put context to why I think this way. So EV was all the rage back in 2021. Let's think back. Let's think back to 2021. Crypto, woo, gangbusters. EV, this is Plug Power, by the way, which is now like a, this it's not a stock you want to, this is not a chart that you want to be invested in. It's a bag hold kind of situation, obviously. But, at some point, at here point, everybody told you, obviously, this was the best thing ever. You got to own it, bro. It's just you have to, right? Well, that those kind of narratives, you just can't buy something that looks like that. You just can't. Every time you see a hockey stick, just go ahead and say that you missed it. I say that, but then this cockroach just LOL. Only got 200 shares that I bought in single digits because a friend was super bullish on it 2 years ago in 3 years. Now we're in 2022. Back in, I think I got it like $9 or something like that, somewhere around here when it dipped in August of 2022. And now it's here. And people have asked me, should I buy Palantir? Should I buy Palantir? I'm like, dude, you can't buy a stock that looks like this. And then, of course, it does this, and I'm like, I don't want people to be mad at me, so I don't give direct advice because things like this happen. Okay, but no, you still can't. Whatever, dude. Do what you want in this. I'm just hodling. I'm hodling. I haven't even sold any calls against it yet, even though I could because I don't want to fight this. So, but it's an AI play, by the way. So that is the AI that I own. So, but going back to Plug Power, what happened? Just as an example of what you don't do is this. But what was very very beaten down during that period. What was the I went searching in about February of 2021 for what is the most hated subsector of the market, and the answer was resoundingly clear. It was, of course, oil. I remember the phrase "oil is going the way of the dinosaur" was the mantra for everyone. Kramer, CNBC, individual YouTubers. And I gaslit myself. I'm like, am I crazy? Because I noticed that ExxonMobil was trading below its book value. That's not a metric I typically go on. But what book value is if they handled all their debt, they sold off all their assets, that's what the company would be worth. And at the time I bought it was like 47 and a half was where I bought it at. Somewhere around in late in or I think it was in mid-January when I was looking for what to deploy, what to buy in the current year of 2021. And I thought I was too late because I missed the bottom. That's just me being silly. But I think the book value was about $55 a share, and it was trading at 47. I'm like, well, this is a very, very cheap, good stock here. And the reason all these energy companies were down was because everyone thought that Biden was going to ban gas cars and oil companies were going to go out of business. That was kind of dumb. How are we going to get away from that infrastructure? And you also have to remember what's going on is that was when oil, because of the pandemic, had dropped, the futures at least, had dropped below zero because there was less consumption, there was lots of inventory. Whole storm of events came together to depress the price of oil, and it's these narratives feed back on each other, okay? And they're very, very often wrong. And so, to that note, this whole idea that people are going to stop buying candy, people are going to stop buying sweets and treats for themselves, pushing down the value of a company that has been around for decades, or maybe even 100 years, I don't know. Like, that's an opportunity. That's one of these once a year kind of opportunities that comes about. Again, it's not financial advice. Look, I'm not telling anybody what to do, but just you have to ignore some of these narratives that people put out there about, like, oh, this thing's gonna go up. I mean, most people are gonna sit here at when something looks like this and tell you to buy it because it's going up. And I don't know why people keep making that mistake. I don't know why human beings do that. Maybe it's a crowd mentality thing. Maybe it's confirmation bias. Maybe it feels good to do what everybody else is doing. It feels secure. Doesn't really translate very well into investing in things in price action. I feel like sometimes I can't tell people what to do affirmatively, but I can tell you what not to do. And that's not to jump into things that are on a tear, that are up after 2-year plus trends, that are up hundreds of percent. You just can't. If it's hard for you to not do those things, you got to make yourself. And then you have to look at things that everybody else thinks are just dog crap. And that's where you get the real returns. And that's what I've had, and I'll continue doing that. And I'll continue being unpopular and ignored because I'm not talking about the hottest thing that people are Google searching as they do. And that's okay. I don't need it, but I appreciate it if you like this kind of analysis to do the algorithm thing for me and like and subscribe and all that kind of stuff. Because I would like for more people to understand this concept and be able to deploy their money more wisely. Everything's a risk. Everything's a risk. And I feel like people get into things because they're up a bunch and they read on Twitter how everyone, which, by the way, everyone is probably bots nowadays, let's be fair. Everyone is talking about how it's just the best thing ever. It's going to be the best thing ever because that makes them feel good. And then when price goes down, they go and they ask the question, which I haven't asked this question in over a decade. Why is it down? I don't ask that question. It's down because it went up before. But they look for these kind of confirmation biases to reaffirm their faith in something. But by that same token, if they go and search, on social media for things that are a good deal, you're not going to find them because people aren't talking about it, and that's why the price is down. It's counterintuitive, but once you do it long enough, it will become intuitive. So, all right. Well, that's what I got. I like to keep things under an hour because that seems to be what people come back and they're more easily able to digest. Any symbols? You guys have been quiet today. You've been letting me talk. Here's a funny for you. Finally received the coveted WTF are you doing from Fidelity. At Fidelity, we believe it's important for investors to periodically review their investment strategies and trading activity to ensure that each is consistent with their investment objective, financial circumstances, and risk tolerance. This is why we want to make you aware that last month, 3,385 trades were executed on your above referenced account, and the overall equity value of your account decreased by $308,638. If we do not hear from you, Fidelity will assume that you're comfortable with and responsible for the trading activity in your account. Fidelity, if you're reading this, I can assure you that I am sufficiently leveraged within my personal risk tolerance. Stop killing my vibe. All right. Well, thanks for hanging out with me, guys. I hope you found this valuable. Look for those things that everyone else is ignoring. That's where the real value lies. And join Discord and come talk to me. That's where these things came from. People looking at volume profile, which I really feel good that people listen and understand to look for these levels because they are very, very powerful. And I've given a lot of lessons on them, and I love seeing the feedback that people are finding value in simple tools for finding opportunity. Because look, Tesla's trading at 180 plus PE. Used to in the 80s, it was 14 price to earnings ratio. That was like the value. Nothing trades at that anymore. Fundamentals, just maybe one day they'll come back. You got to find some other metric for finding asymmetric reward risk trades. And I'm here to try to teach what I think is going to work. So thank you guys. Have a great weekend, and I'll be back next week. Trade wisely.